Yo, what's up, good people? You're welcome back to a new episode of this lecture. So, in the last video, I explained the structure of Quasimodo. So, basically, I showed you how it looks like, and I gave you an example on gold chart. So, pretty much this is how the structure looks like. So, today I'll be explaining much more about Quasimodo. So I'll be giving you the examples of Quasimodo we have, and I'll be showing you a few examples on the chart also, and explain some other things. So first of all, the first example of Quasimodo, as I said earlier, let me just give a quick recap of the last class. Quasimodo is an early reversal sign the market gives, or let me say a pullback sign the market gives. So for instance, if the market has been going bullish for a while and it wants to start going bearish, so it gives a Quasimodo sign of sell. You understand? And I gave you guys an example of how a sell setup looks like on the real chart. So the first example of Quasimodo is a Quasimodo reversal. Basically, generally all Quasimodo structures are kind of Quasimodo reversal, excluding some ones which I will talk about. So we have about three. We have the QMR, the QMC, and the QMM. Now there is this misconception about QML and QMR. Now guys, take note. QML is Quasimodo level. QML is not a structure itself. QM reversal is a structure. QM manipulation, that's Quasimodo manipulation, QMM, is a structure. QMC, which is Quasimodo continuation, is a structure. You understand? I will explain QMC also in this video, just an introduction to QMC, but basically I'll be talking much more about QM reversal in this video. Now, as you can see, the structure I labeled right here, this is a Quasimodo reversal structure. We have for a sell setup, as you can see. So we have the high low, higher high, lower low, and the entry. Now for QM level, for a sell setup, the QM level, if it has a supply zone, then the supply zone, which probably SMC traders call order block or whatsoever, is your QML. You understand? So basically they are just representing the QML, which is the Quasimodo level, and which is also your entry point. And don't forget, your entry point is always on a straight line with the first eye. You understand? For a sell setup is your QML. You understand? So QM level is the level at which you are entering for your trade. You understand? And also for the buy setup, right here, you have the low high, lower low, higher high, and your entry point. So if there is a demand zone, then that will be your QM level. You understand? So basically what I'm just trying to say is, if there's a demand or a supply zone at your point of entry, I will be showing you guys an example in this video, so just calm down and understand the concept first. If there's a demand or a supply zone at your entry point, then that is your QML. The structure itself is QM reversal, that's Quasimodo reversal. So this is for the buy setup, this is for the sell setup. Now, I guess you guys already understand the structure. So for QMC, it is a bit different, not different per se, but it is, let me put it let me put it this way, like the price is making a bearish trend. That means the price is selling massively, probably on the H1 time frame, 4 hours time frame, whatsoever. Now price makes a QM structure for sell. You understand? Generally the definition of Quasimodo is a structure that gives trader insight that okay, price is about to reverse or go in this direction or whatsoever direction. Now the price is going bearish and price is making a QM sell going in the same direction of the market. That is QM continuation. So it's just a Quasimodo structure giving the continuation of the market trend. You understand? So let me give you the structure right here. So as you can see, this is Quasimodo continuation. You understand? So this straight line right here, signifies that the price is coming from somewhere. You understand? Now let's use this as our trend line. Price touched this trend line, came down, then it formed high, low, higher high, lower low. Then your entry, as you can see, this is the first touch, this is the second touch. Then your third touch is the entry, straighten with the first high here. You understand? So this is just a form of Quasimodo continuation. This is the structure of Quasimodo continuation for a sell setup. You understand? So it is just basically following the trend. It's just you bringing in your QM reversal that is following the trend. You understand? So instead of QM reversal, it will not be QM reversal. It is now QM continuation of the market trend. And also the same applies to your QMC for the buy setup. Market is going bullish and price forms a QM that is telling you to buy. And so we have low, high, lower, low, higher, high, and your entry points, and bang, price is pushing all the way up. Understand? So it's just the continuation of the market trend. Take note of that. That is your QMC. But for QM reversal, it is the change in structure of the market. So if the price has been going bearish for a while and the market is about to reverse to go bullish, it gives the sign of QM reversal for bullish trend. You understand? Now you can see that I labeled QML also on the QMC. Why? Because there are some structures that also have QML for QMC. You understand? So I already explained QM level. You understand? So QM level is probably you have a demand zone or a supply zone, as the case may be, for the setup. So any QM can have QM level. You understand? Whether QMC, QML, even QM manipulation. I'll explain about QM manipulation probably in the next video. But for today, I'll be showing you some example, and I'll be showing you how to set your stop loss, your take profits. I will just talk about it then. In the next episode, I'll talk about QM manipulation and we'll talk more on the chart. So this is basically how the structure looks like. If you are writing something, you can put it down in your notes. And now let me go to the chart and show you some example of QM reversal. So I won't talk about QMC today on the chart. I will only talk about QM reversal on the chart. So let me go to the chart right here. So I've labeled this is gold charts on the 15 minutes time frame. Now this is the chart I've labeled, and this is March 2023. This is high, low, higher high. This is your lower low right here. If I shrink it, you can see it very well. High, low, higher high, lower low, and your entry points. You understand? Now if I move to the 30 minutes time frame, now as you can see right here, I want you guys to take note of something right here. So this is your high right here, and you can see a supply zone right here. Now you can call this supply zone your QM level. You understand? Your QML. And as you can see right here, when price reversed, at first, let me highlight the demand zone. So from this point all the way here. Now, very good. So as you can see, at first price tapped into the level of the entry point, the normal level, the initial level of entry point. Then price started playing up, down, up, down, up, down on the 30 minutes time frame. Now, before price actually started selling for real, before it dropped about 300 pips, it tapped into the QM level, you understand, which is the supply zone, you understand. Now, a normal trader, or let me say a novice, would have entered here. Of course, there are some times where price won't even tap into this zone, but for those that love sniper entries, or let me just put it that way, for those that love sniper entries on their trades and stuff like that, or if you don't filter your trades to a lower time frame, you are just entering literally on whatever setup you see, you would have entered here, and price would have gone up about 55 pips before going your direction. And of course, this is a good risk to reward ratio, but at the same time, the risk might not be worth it, because you might be risking about, let's say, 30 pips for a trade, for each trade you are taking, and price would have gone up and hit your stop loss before you even start selling. Why? Because you didn't even filter it up onto the higher time frame to see if there is a QM level that is giving your demand zone or your supply zone, you understand. So that is why it's always good to use multi time frame before entering your trades. So as you can see, price tapped into this supply zone and it went up about 24 pips and started selling all the way to about 340 pips. Now, if you are calculating, let's say for this trade, after entering from the QM level, you are setting 30 pips as your stop loss. If you are dividing, even if it is just 300 pips, you are able to catch from the trade. So 30 to 300, that's about 1 to 10 risk to reward, you understand. So, and it is very, very beautiful, very, very beautiful. Average traders just set their RRR to about 1 to 2, 1 to 1 sometimes, and they are good. Now this trade is about 1 to 3. Why? Because our target is the lower low right here, you understand. Now I will show you another example before I talk about something else, before I talk about your setting of stop loss and take profit. All right, so this is another example of QM reversal pattern on gold. So this is good. I will show you one more example on GBP. Then I will talk about stop loss. I'll briefly talk about stop loss. Then in the next video, I'll talk more on stop loss and how to take your profit, what you should see before taking your profit and the likes. So this is a very, very beautiful setup on gold. So we have the high, low, higher high, lower low, and your entry. So this is the 15 minutes time frame. There's something you guys should observe. Okay, before I continue, I would love to tell you guys, no matter how I explain here, if you are not doing justice to backtesting, it will seem as if you understand. But when it comes to the real sense, you do not understand. You understand? So I will implore you guys to always backtest. See what I've explained here and try it out on your own. Go to your chart, backtest yourself, and put it in mind. You understand? So because basically what the market does is it repeats pattern. If I filter this good trade to smaller time frame, or if I show you my backtesting charts, you see how I've labeled several QM setup, because basically markets gives QM, especially on gold, almost every day. Now, as you all know, no setup is an holy grail. There are setups that fail, and I will still talk about them in this video in upcoming episodes, why QM setup fails. And when a trader sees a new strategy and tries it for about probably a week, 2 weeks, and is probably losing back to back, they'll feel the strategy does not work, and that is why many people feel QM setup don't work and blah 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 like that. And it is because they are getting it all wrong. They've not done justice to backtesting what is making the setup fail and some other things like that. They just jump on it and say, okay, this is QM up, down, higher, lower, lower, low, blah blah blah, then take the trade. That's very, very wrong. There are some things you have to see, excluding the fact they are saying high, low, high, lower, low. It is more, there's a lot of things to it, not just this high, low, and blah, blah, but we'll get to it. Let me just continue this QM level I'm talking about. So as you can see, this is high, low, higher, high, lower, low. And same here, as you can see, there is a supply zone right here. For this is a sell setup, obviously. You understand? So there's a supply zone right here. If I highlight the supply zone, you can see price did not exceed this supply zone before selling, and I'm very, very, very sure this is a news event, because whenever I see price drop massively like this, only news can cause this. You understand? Even dropped even lower than the TP. So this is about 185 pips. You understand? Price started going up, down, up. If I let me filter this to 5 minutes time frame. You can see that price actually made another setup right here. Let me delete this QML. Price made another QM setup right here. Yes. So this is high, low, higher, high, lower, low. Now let me give you an hint to getting this QM setup very well. If you are confused, because at first you will be confused. If you open your chart on your own, you might not even know what to look at. You might not see anything. Understand? So what I would advise is change the chart to a line chart. Then you'll be able to see the QM setups very well. As you can see, it is very, very clear now. High, low, higher, high, lower, low. Then your entry and bang. So if you change it to a line chart, you will see it very well. One other thing, please and please, if you are looking for a valid, this is where I'll start the explanation for valid setups and setups that are not valid. If you are changing your line charts, if you are changing your chart to a line chart, you see that the wick of the candlestick will automatically get erased. Like you won't see it, because market actually traces the candlestick themselves, not the wick. Understand? So before changing it to line charts to see if the setup is valid, make sure your lower low is lower than the first low by candlestick. I will explain that in the next video, but just take note of it. And for the buy setup, make sure your higher high is higher than the previous high with candlestick, not with wick. Understand? Make sure the candlestick covers the wick. Understand? Don't worry, I'll explain more of that in the next video. So this video is getting long already. Let me just round it off by showing you this GBP AUD example, which will be the last example for this episode. Okay, so this is a very, very beautiful setup. High, low, higher, high, lower, low, and your entry. Of course, you can see right here our supply zone smiling at us right here. So basically what you are saying is price is tapping into the supply zone. This is the H1 time frame where you are seeing the supply zone. Price just tapped into it with how many pips? Just 2 pips, and bang, this is about 233 pips. So let's take, for instance, we have actually entered this trade off of this QM level. You set your pending order and you are risking about, let's say, based on what we are seeing, let's say you are risking about 10 pips. So 10 to 200, that's a lot. You understand? That's about 20 RRR. That is massive. So basically, this is how many traders get their sniper entry. Not all, because we all don't use same strategy. And of course, things can go sideways. That is why I advise you guys use your stop loss. And mind you, price don't make this kind of setup regularly. That is why, okay, let me put it this way. This will be the last thing I'll say in this video. a sniper shooter don't shoot all the time. You understand? That is why they are called sniper shooters. They find perfect time, perfect scenario to take their shots, because they take it once in a while. You can't see a sniper shooter going for a war where they are shooting AK-47 and machine guns. No, they stay somewhere, look for perfect shots and give it the shot. You understand? So if you are a sniper shooter, look for the perfect setup before taking your trades. So that would be basically all for this episode. If you find it helpful, do also subscribe to the channel, like the video, and if you have any question at all, drop it in the comment section. I'll check it out, and if I do not, you can message me on WhatsApp, and I'll see you guys in the next one, where I'll be explaining how to set your stop loss, your take profit, and some other things you guys need to check out for a valid Quasimodo setup. So with that being said, I'll see you guys in the next one. Peace.